Is cryptocurrency an alternative asset? Well, let's talk about that in this video, but more importantly, should it be a part of your investment portfolio? Let's talk about that right now. So you're probably looking at cryptocurrency, you're probably wondering, is this an alternative investment or not? Short answer is yes, right? The real question is, should it be a part of my portfolio and how much should I put in it and how we do this? That's what I want to talk about in this video right now. Now, more importantly, I wanted to put a disclaimer out there. I am not an investment advisor. I'm not telling you should buy crypto. I'm not saying how much you should be buying of it or whether you should buy or sell. None of that. I just want to give you some more education because one is an alternative investment. Yes, cryptocurrency is an alternative investment depending on the kind of cryptocurrency you get. Now, what are alternative investments? They're basically anything outside of stocks, bonds, and mutual funds. Stock, bonds, and mutual funds are more of the Wall Street investments. It's the mainstream kind of thing that you always hear about. But the Main Street investments, also known as alternative investments, these ones do include cryptocurrency. So if you buy Bitcoin, Ethereum, whatever it might be, yes, that is. Now the real debate would be, is something like XRP an alternative investment, right? You know, where that is more of an exchange traded fund or ETF. Is it alternative or not? There could be some debate on that. Many people would probably say that is more along the lines of paper assets. It's more, you know, something that's not always based on cryptocurrency prices, more based on people buying and selling it. Understand this, like when you buy a mutual fund, right? When that's a collection of stocks, they always tell you it's like, oh, you own a little bit of everything, a little bit of Walmart, a little bit of Apple, a little bit of this and that, right? They always say you have all these things mixed into your mutual fund. But what they don't tell you is this, is that you're not actually investing and owning the stocks. Yes, those funds do pool the money and they do buy those stocks. They have a very tiny ownership in those companies. However, what you're actually investing in is more like a copy of a copy. Have you ever seen the movie Multiplicity with Michael Keaton, when he actually makes clones of himself, and then his clones even make a clone, and the clones kind of regret making that extra clone because they said, hey, you know what it's like when you make a copy of a copy? You know, the original copy looks good from the master copy, but then you have that little less faded copy that you then make a copy out of that, and that's even more faded, and it doesn't look as good. That's kind of what happens with a mutual fund. Mutual fund has its own prices independent of the stocks there. Yes, the stock prices do influence it, but remember, a mutual fund has its own price going up and down based on what people are buying that specific mutual fund or selling that specific mutual fund. So just be aware that even if the stocks might be okay, if somebody sells off a bunch of that mutual fund, just that fund specifically, or sells off their shares in it, you could actually lose money even if the stocks are going up. So the same thing with cryptocurrency, right? You might have like XRP, which I've had plenty of friends tell me, you gotta be an XRP. That's the best place to be. I don't know why I sound like a wrestler, but I do. They're like, you gotta get it. It's so awesome. It's like, yeah, I am, but I'd rather just buy Bitcoin or buy Ethereum or something like that. Like I can buy the actual tangible thing. Well, okay, let's be honest. It's not tangible. They're all digital, right? But I'd rather buy the digital asset rather than the fund representing the digital asset, if you know what I mean. Now, that being said, now, should it be a part of your portfolio? Is cryptocurrency, is there a place for it? I actually think there is, but this is kind of my own personal rule. You could take it or leave it. You could do whatever you want because I know there's varying degrees of opinions on this. But for me personally, I only put money in cryptocurrency that I'm not afraid to lose. Money that I wouldn't feel horribly guilty telling my wife about, right? If I were to lose it all. Now, do I think that Bitcoin is going to go down to zero? I don't think so. I don't think that would be the case. It's possible. It probably won't happen. But do I trust that I'm going to make billions off of it? No. I don't. I do think there'll be other things coming up that Bitcoin might be like one of those things like, oh yeah, remember that Bitcoin? Yeah, that was pretty cool. But now there's this, right? I think there might be something like that, whether it's a digital dollar or something else. There could be something to replace it. Do I trust in Bitcoin? No, I do not. You know, I don't trust it any more than I trust in the US dollar. Actually, I probably trust in the US dollar more than I trust in Bitcoin, let's be honest. I know that will offend some Bitcoin advocates that are like, no, that's the only way to go. But you know, here's the fundamental problem I have with Bitcoin and Ethereum or anything else. Ethereum has a little bit better fundamentals behind it, but the problem with Bitcoin is this, because I got introduced to it back in 2010. Now, if you knew Bitcoin's price in 2010, look it up. You'd be like, Chris, you should be a freaking billionaire by now. I should have been, but when I got pitched Bitcoin when it was literally pennies on the dollar, I was like, you know, it sounds good and all, but the point back then was replace, you know, stay away from the dollar, right? It was almost like an alternative to gold and silver, which is an alternative asset. And those ones have had very big history behind it. So this unknown Bitcoin thing comes out. They're like, yeah, this is going to replace the US dollar. In fact, it's better because I don't trust the US dollar because it's not backed by anything. I say, oh, interesting. What's Bitcoin backed by? Nothing. All right, well, doesn't that make Bitcoin just like the US dollar, backed by nothing? Just demand? Just the fact that you believe in it? Isn't that the same thing as the US dollar? We believe in it, that's why it goes up. When people don't believe in it, it can crash, right? Yeah, well, yeah, but still, it's better. Okay, cool. So I didn't really buy into it at that time. Now, I did buy into it later. I did buy into it in the 2010s, especially after there was a nice little crash that came down from 20,000. I decided to buy in. When everybody stopped talking about it, I thought, I'll play with it. I put in my own play money, tried it out, and hey, made pretty good money off of it. We hit around $50,000. I sold out of it before it crashed down to $16,000. Now, of course, depending on the day and when you watch this video, when I'm recording this right now, it was up over 100,000 and then crashed down into the mid to upper 80s. It's kind of do whatever it's doing. But again, I own a little bit of crypto, but I really just don't care. It's not something that's a big part of my portfolio, because the truth is, I have never become financially free off of something like crypto. Well, mutual funds maybe, stocks maybe, but it's really, really hard. Okay, it's very difficult to do. But with crypto, yeah, there are some things you could be doing with it. But again, I don't rely on that because it just does not generate the income that you need. I remember several years back, I had a client who was definitely more into tech type stuff. And he's like, Chris, you gotta get into this Bitcoin savings account. It pays 9% a year. It's so good. It actually beats inflation, unlike everything else out there right now. And I said, yeah, I don't know. That sounds kind of temporary to me. That sounds like it's kind of on a house of cards. And guess what? It did. He lost a couple $100,000 of his money because he thought that was the place to keep it. It would be safe. He can always cash it out. But again, because everything's so experimental with it, it's more speculative. It's not like a real asset, like real estate. Real estate can still have risk. You can still lose money in real estate, but it's much harder to do, especially when you have the asset. Or if you have something it's got an asset as a backup or a collateral to it. It's really hard to lose that kind of money in real estate. And so again, I stay away from that kind of thing. I stay more in real estate where it's been a real asset. It's been proven for thousands of years. Yes, I have some gold and silver too. Probably a little bit more of that now than I have of crypto, although that's not always the case. But yeah, I've got more gold and silver there because I know that's more stable. I keep stable things. I keep my money liquid, even if it's a simple savings account or my infinite banking policy, I keep it there. I diversify it that way. And then I go, of course, keep a lot more money inside alternative investments. By the way, I do not have 100% of my money in real estate. That's another thing too. I just spoke with a client recently where he said, Chris, if I were to go back and do this again, I would not put 100% of all my money into all real estate. He's like, that's the mistake I made, because he's like, I had that infinite banking policy, but I even stripped all the cash out of that to put it in the real estate, and some of these deals didn't do so well, especially in these last couple of years where we have the worst real estate market we've had in a while for commercial real estate, like apartment buildings. So he's like, I wish I would have kept some money liquid and safe, like in life insurance. I'm like, yeah, that's a good point. You do want to do that. You want to start diversifying. So if you're just starting out right now and you're looking to get into investing space, just build up cash, build up savings. Between savings accounts, bank accounts, whole life insurance, with infinite banking, you can do that. We teach about that a lot on our channel. As you start to build and grow that more and you start to have more assets, then your next goal should be financial independence. How do I get enough passive income to cover all of my expenses at home? How do I get to that place? And then after you get to financial independence, you go more for financial freedom, start to build up beyond that. Maybe it's 50 to 100% beyond the number you need for financial independence. And then from there, you start to build more for wealth. This is where you might start diversifying in different places. You might buy more crypto because you're not needing the income anymore. Now you look for something to help grow your portfolio. Again, what percentage should you do? I'm not an investment advisor. For me personally, I probably wouldn't put more than 1 to 5% in something that speculative like crypto, because it's nice to get the gains, but of course I could have losses. So again, I like to grow my wealth. I like to make sure that nothing will drag it down, but you can play a little bit of offense with some speculative stuff, maybe 5% of your portfolio. The rest, the another 95%, have between different cash or equivalents, have it in different things like real estate and different alternative investments, oil and gas. I have money there. I have money in businesses and things like that help diversify me so I grow money in all the asset classes versus just crypto, which is barely even a class of itself. All right, if you want to know what other things can you be doing, what are the other alternative investments you could be doing as well, be sure to subscribe to this channel, because we also have podcasts coming out talking about very different strategies, even some creative ones that you could be doing that could help you create wealth today. Be sure to subscribe to the Money Ripples channel now.